is based upon the Obama administration proposal and is one component of a broad financial regulatory reform package. The Financial Services Committee considered this bill last week and ordered it to be reported favorably. It is now our turn to consider the legislation. It is clear that our system for protecting consumers in the financial marketplace is broken. The structure and division of responsibilities among the banking agencies has led to a regulatory race to the bottom. The Federal Trade Commission has taken steps to protect consumers, but its jurisdiction is limited, and it has been hampered by a slow and burdensome rulemaking process. A new approach is warranted. The legislation before us creates a new Consumer Financial Protection Agency that will be responsible for consumer protection across the entire financial marketplace. It also provides for important new authorities for the Federal Trade Commission that will improve FTC's rulemaking and enforcement capabilities. I've examined this proposal with two key goals in mind. First, we must structure any new agency so that it meets its mission and serves as a strong, authoritative voice for consumers. And second, we must ensure that the Federal Trade Commission is strengthened, not weakened by any changes. Unlike the banking agencies, FTC has consumer protection as its core mission. I worked closely with Chairman Frank as he conducted his committee's consideration of this legislation, and I'm pleased that he made many essential changes to the bill, particularly with regard to the impact on FTC. His amendments would preserve FTC's full authority under the FTC Act and enable FTC to continue to enforce aggressively against financial fraud. Chairman Frank also improved the CFPA itself. His changes would make CFPA fully independent from the executive branch and would prevent banking regulators from having a direct role in the governance of the agency. These and other changes strengthen the legislation. I do have some concerns about amendments that were added to the bill during consideration at the Financial Services Committee. A primary goal of this legislation is to ensure that consumers are protected from unfair, deceptive, and abusive practices throughout the financial marketplace. I'm concerned that too many exemptions and exclusions were put into the bill. The broad exclusions that prevent CFPA from regulating or enforcing against merchants and retailers, auto dealers, and others could weaken the agency and create confusion in the marketplace. I will not seek to amend any of these exclusions today, but I will want to examine them closely as we move to consideration on the floor. I'd like to thank Subcommittee Chairman Rush for his diligent work on this issue in recent months. His subcommittee held an important hearing on this proposal just 1 week after the legislative language was introduced. The testimony at that hearing has informed the debate about the proposal and has been essential for our preparations. At the appropriate time, I will be introducing a manager's amendment jointly with Ranking Member Barton. We have worked together in preparation for this markup and have found agreement in important areas. I will also be introducing an amendment to further strengthen FTC's litigation authority. I urge my colleagues to support the manager's amendment, my amendment on FTC authorities, and final passage. And I want to recognize Mr. Barton for an opening statement.
Thank you, Mr. Chairman. I think you and I both share the same goal of preserving the jurisdiction of the Energy and Commerce Committee, and that is the reason, the primary reason, that I have agreed to participate and to be supportive of some of the things in this markup, so that this committee, which has jurisdiction over interstate commerce, maintains its existing jurisdiction over this new agency if, in fact, it comes into existence. I might say, before I give the rest of my opening statement, we have the chairman of the Federal Trade Commission with us in the front row. We're welcome to have him today. We may give you a vote later on some of these amendments if it's necessary. I'm pleased to see that some of the provisions, Mr. Chairman, in the original bill that would have stripped jurisdiction from the Federal Trade Commission and given it to the new agency have been dropped or modified. This means that the Federal Trade Commission will continue to have significant consumer protection authority. As we discussed during the July subcommittee hearing on the proposal, the Federal Trade Commission has been a leading bright spot in federal consumer protection over the years. This reflects the fact that the committee is very active with respect to laws on consumer protection issues ranging from privacy and identity theft to financial fraud perpetrated against consumers. I intend to support, as you indicated, Mr. Chairman, the manager's amendment, which does contain provisions that both sides of the aisle can support. In addition to preserving the FTC's ability to enforce its current statutory authority, it also ensures that the FTC will have shared enforcement of authority over some authorities that are being transferred to the new agency. Additionally, the FTC will be treated the same as the proposed agency and will receive notice from the CFPA anytime the CFPA initiates an enforcement action, and will have the right, and the FTC will have the right to intervene and to be heard. This improvement in the manager's amendment will ensure that decades of experience that the FTC has in dealing with consumer protection issues can be brought to bear under the new regulatory regime if it, in fact, turns out to be given. What I cannot ultimately support is final passage of this legislation. I do not believe that we need to create a new super financial regulator. I think that's the wrong response to the financial crisis, and I do not think that it will do anything to correct the fundamental problems that created the crisis in the first place. The history of the current financial crisis is still being written. It involves many problems in the mortgage lending and security markets, the collapse of, in my opinion, a flawed Fannie Mae and Freddie Mac, the collapse of many private banks and insurers, and lax oversight by both public and private entities that allowed the world's largest Ponzi scheme to date, perpetrated by Bernie Madoff. Solving these problems with one piece of legislation to shuffle the deck chairs into a new agency, in my opinion, is not going to overcome the perils of just general human greed and lack of morality. Scam artists will not disappear because a new agency is created. They will simply find a new way. Just last week, the Inspector General for the Treasury Department testified the level of fraud associated with the new home buyers tax credit is pervasive. So even when Congress tries to enact a solution, we only create, and many times, additional problems. Mr. Chairman, we have a number of amendments that we plan to offer during the day's markup. I think there are about 12, but we do intend to be cooperative, again, on the manager's amendment, and try to maintain the jurisdiction of this committee. But on final passage, Mr. Chairman, I will vote no, and will ask my friends on the minority side to also vote no. With that, Mr. Chairman, I yield back, and we look forward to a productive markup.
Thank you very much, Mr. Barton. I assume Mr. Rush will be here soon, and I want to recognize him if he wishes to make an opening statement. But I want to recognize the ranking member, Mr. Radonovich. Mr. Radonovich, do you wish to make an opening statement?
Yes, I do, Mr. Chairman. Thank you very much. Mr. Chairman, thank you for having this markup today and giving us the opportunity to express concerns and suggest changes to one of the most far-reaching pieces of legislation this committee will vote on this Congress. The bill before us creates the Consumer Financial Protection Agency and removes authority from the Federal Trade Commission. Given these sweeping changes, it's troubling that the subcommittee with jurisdiction over the FTC, the Commerce, Trade, and Consumer Protection Subcommittee, had only one hearing on this topic. In September, realizing the importance of this piece of legislation, Republican members of the subcommittee wrote a letter to the majority asking for an additional hearing on the actual legislation, and we never received a response. What concerns me even further is that we're not given the opportunity for a subcommittee markup of this bill. Considering that the entirety of Title II would normally be considered by this committee under a reauthorization of the Federal Trade Commission Act, some provisions, such as the APA rulemaking authority, stretch far beyond the scope of financial protection into the broader economy. At the very least, a subcommittee markup would have seemed appropriate. With respect to the rulemaking authority, specifically, a Democratic Congress imposed the more rigorous Magnuson-Moss rulemaking procedures on the FTC for a reason. Providing a blank check for rules is a change Congress should not contemplate lightly, particularly when the impact would be sweeping. Mr. Chairman, I'm beginning to see a pattern in this legislation that is coming out of the Energy and Commerce Committee. It seems that if there is a bill that has any possible way to increase the size, scope, or structure of the federal government, this committee will pass it. In fact, the two major bills that have passed out of this committee, the cap and tax non-energy bill and the government takeover of health care, have each come with a price tag closing in on $1 trillion and represent a massive expansion of the government into the private sector. In fact, the author of this legislation, Chairman Barney Frank, earlier this week bragged that we are trying on every front to increase the role of government. In my opinion, that isn't something to be bragging about. The current government behemoth before us today, the CFPA, would have jurisdiction over nearly any financial activity, product, or service used by a consumer, and potentially many products or services not traditionally considered financial. This bill is riddled with contradictions, broadly defined terms, and an infinite potential for ill-advised regulatory authority. In a nod to government's own narcissism, this definition of any activity is to be determined by the CFPA, which literally gives it the authority to expand its jurisdiction at will without congressional approval. This reminds me of something former President Ronald Reagan once said: regulations are like spores of fungus. They settle anywhere and everywhere and create more spores. In this case, the CFPA isn't just the spore, it's the entire fungus. All of this overregulation is in the name of increasing consumer protection, which everybody agrees is a good thing. But must it be done? It must be done in a correct way. While the current regulators of the financial sector often do a poor job enforcing consumer protection, they still have a mandate to ensure safety and soundness of the banking industry. We should be focusing on how to help them better protect consumers and meet these responsibilities, not expanding government authority and creating more rules. The ability to define such terms as unfair or abusive without the mandate to ensure safety and soundness is a cocktail for an unstable financial sector, not something that our already unstable economy needs or something that helps protect the consumers. In another curious move, the CFPA absorbs all of the FTC's Consumer Protection Authority, one of the agency's primary missions and one that is carried out extremely well. The FTC has a robust consumer protection division and did not contribute to the current economic crisis and should be allowed to retain its enforcement authority. Currently under the bill, the FTC has secondary enforcement authority and no authority to issue rules, guidance, or requires reports for the enumerated statutes that are transferred. Mr. Chairman, the Consumer Financial Protection Agency is a conglomerate of frightening government gluttony, and I thought could only exist as oppressive agencies in Ayn Rand novels. And while there are probably many ways to improve the endless shortcomings of this legislation, I believe the best fix would be to scrap this entire bill, allow the FTC to continue its aggressive consumer protection, and focus on meaningful reform within existing agencies. I yield back, Mr. Chairman.
Thank the gentleman for his comments. Mr. Dingell?
Mr. Chairman, thank you. You are to be commended for convening today's markup and for the way you have handled this difficult matter. In its consideration of H.R. 3126, the Consumer Financial Protection Agency Act of 2009, this committee will fulfill its traditional role as the Congress's bastion of consumer protection, and in addition to preserving, and I dare say, augmenting its jurisdiction in that area. I have heard complaints today about people who say that this is an excessive expansion of government authority. I wonder how that argument would be received by those who were victimized by Enron or by Mr. Maddow, who stole hundreds of billions of dollars from unknowing and unsuspecting people, or who are now seeing their homes going into foreclosure because of the grotesque and gross misbehavior which we have seen on the part of those good-hearted Wall Streeters who have made billions while sinking the American economy into the worst recession since the Great Depression of 1929. Before we take up H.R. 3126, we would do well to contemplate the genesis of its necessity. In 1999, the Congress and the President approved the Gramm-Leach-Bliley Act, which I strongly opposed, which repealed the Glass-Steagall Act, which had successfully governed the financial services industry for over 60 years, and which had prevented that financial services industry from engaging in the kind of outrageous misbehavior which brought on the 1929 crash. I gave full-throated opposition to this outrageous legislation on the floor of the House, based in no small part on my belief that it would permit the creation of financial institutions which, for lack of better description, would be too big to fail and too uncontrolled and unfettered in their misbehavior to be trusted with public monies. That statement had the merit of being true 10 years ago, and it is at least today prophetic. Indeed, Graham Leach Bliley gave rise to the creation of financial juggernauts without limitations on their power or structure, whose underhanded actions, gone unregulated by design of that act, have driven this country over an economic precipice of proportions not seen since the Great Depression. This, in my mind, makes it incumbent upon the Congress to reimpose a regulatory environment upon the financial services industry that will ensure the abuses which gave rise to the present and aptly named Great Recession will never again occur. While I posit the legislation pending on our consideration today and the economic crisis from which it draws purpose could have been avoided 10 years ago by opposing Graham Leach Bliley, I nevertheless offer my support for H.R. 3126 as a laudable effort by which the consumer will be protected against further deregulation, which is either on the books or which might enter the books, and the chaos which flowed from it or which could flow from it. All the same, I believe H.R. 3126 is not perfect, in keeping with my belief that the creation of colossal financial institutions, unregulated and free to steal or engage in any manner of rascality that they might deem appropriate, is in large part to blame for this country's current economic malaise. I will support the amendments to this bill when it is considered by the full House or other legislation to compel the restructuring of these financial institutions deemed too large to fail. I urge my colleagues to support this concept so as to give the federal government a powerful and necessary tool with which to prevent the systematic risks that this kind of situation poses to our economy. Thank you, Mr. Chairman, for your courtesy. I yield back the balance of my time.
Thank you very much, Mr. Dingell. We are going to recognize members who wish to give an opening statement for 1 minute, but I'd like to ask unanimous consent that all members' opening statements will be put into the record, and if members don't wish to use that minute, they can just put their statements in the record. Any members seek recognition for an opening statement for 1 minute? Mr. Shimkus.
Thank you, Mr. Chairman. I'll be real brief. All we want is really transparency. The real reform would be to allow the manipulative Wall Street barons, when they fail, to go bankrupt. And since we were intent on bailing them out, we are now in this process of trying to figure out why we allowed failure to be rewarded by government bailouts. And that's why. I want to just concur with what my colleague, Mr. Radonovich, said, quoting Chairman Barney Frank. Said, we are trying on every front to increase the role of government. If you ever want to see a real separation between the parties and ideology, this is another example, and this is all we've seen from this Congress is more government, more regulation, more taxation, bigger burden, which hurts the competitive market in its field. And I'm sorry we continue to go down this path. I yield back my time.
Gentleman yields back his time further. Mr. Inslee for 1 minute.
Thank you. While this is a laudable step forward, I'm concerned about the overall lack of ambition of our efforts. And I believe our efforts at the moment, because they allow banks to become too big to fail, our efforts are too little to succeed. And the direction we are now on are to allow a continued concentration of this industry and a continued exposure and a continued expansion of moral hazard in an immoral way. And I don't know how big the fire has to become until we learn that allowing institutions to become so large that the federal taxpayer is going to have to be on the hook for them one way or another is simply not adequate to the task at hand. I joined Mr. Dingell in the Glass-Steagall Act. We ought to revisit that. I hope we do. I'll mention one other smaller matter in the bill I hope to change. Ultimately, we treat banks and credit unions differently in this bill as to when the threshold kicks in. They ought to be the same. The credit unions have been at least and probably better. I think the record has shown they are less responsible for this clap. We ought to treat them the same. I hope that gets fixed. Thank you.
Gentleman's time has expired. Mr. Pitts.
Thank you, Mr. Chairman. This bill has important implications for consumers and the FTC. We've all learned much from the recent financial meltdown. We learned that easy access to liquidity and poor lending standards can bring down global markets. We learned that too big to fail poses a real risk to the taxpayer. But we also learned that an overly cumbersome and complex regulatory structure creates gaps in oversight. Regulatory gaps lead to irresponsible market behavior, which then lead to less marketplace transparency, excessive risk-taking, and most importantly, less consumer protection. And it's for this reason that we're here today, to better protect consumers. We must do this prudently, though, avoiding the mistakes of the past. There are now 8 federal financial regulators. Now we're talking about adding one more. Unfortunately, creating yet another divided system of regulation only makes more room for further gaps in oversight. We saw the effects of divided regulation at Fannie Mae and Freddie Mac, where 2 regulators meant less regulation, not more. Instead of adding a 9th layer of bureaucracy to financial regulation, we should work to streamline our regulatory agencies, bring transparency and consumer choice to our markets. Consumer financial protection is a worthy goal. Unfortunately, increasing the layers of bureaucracy in the financial industry has not protected consumers in the past. I see no reason why it will this time around. We all desire effective and efficient enforcement of consumer protection laws. It's my hope that as the committee moves forward in a wise and careful manner with increased transparency and consumer choice as their primary goals, that this will be accomplished. Thank you, Mr. Chairman.
Gentleman's time has expired. We have a vote on the House floor. I'd like to complete the 1-minute opening statements, and don't feel obligated to give one because your statements can be made part of the record. Anybody wish to be recognized? Mr. Space.
Thank you, Mr. Chairman. I very much appreciate your efforts in strengthening consumer financial protections across the country, and I support the movement toward a more consumer-friendly financial system. The manager's amendment being offered today, I believe, makes great strides toward increasing the FTC's authority to go after bad actors, and I support those efforts. However, I do have some serious concerns about the underlying bill, specifically how it affects community banks. These are the institutions during the last few years in these worsening financial times that have acted responsibly and have done the right thing and have been a vital source of financial support for small rural communities like that in southeastern Ohio. These community-oriented financial institutions who acted responsibly should not end up being penalized by increased overly burdensome regulations. Again, Mr. Chairman, I thank you for your efforts on increasing consumer protection, but I regrettably will have to oppose the underlying bill. I want to make clear that my opposition to the bill does not lie in any desire to protect those mega banks that are so responsible for dragging us into this serious Great Recession, as has been referred to today, but rather a commitment on my behalf to stand with the community banks who have consistently provided and met the rural needs of Southern Ohio in a responsible fashion. I yield back. Thank you, Mr. Chairman.
Thank you, Mr. Space. I'd like to ask unanimous consent that the committee will consider as base text the text of H.R. 3126 as ordered, reported by the Committee on Financial Services on October 22, 2009. And further, without objection, the bill will be considered as read and open to any amendment at any point. With that agreement, we'll recess now to respond to the votes on the House floor, and when we return after those votes, we will go immediately into amendments. We stand in recess. Committee will please come to order. The chair recognizes himself for a manager's amendment at the desk, and without objection, that amendment will be considered as read. And I'll recognize myself to present this amendment. This manager's amendment is being offered jointly with Ranking Member Barton. It has several key provisions. First, we propose that the CFPA be governed by a 5-member independent commission, similar in form to other commissions under the jurisdiction of this committee, including the Federal Trade Commission, the Federal Communications Commission, and the Consumer Product Safety Commission. This commission would replace the single director proposed by Chairman Frank's committee. Second, the amendment includes a provision proposed by Chairman Emeritus Dingell that would strengthen the FTC's ability to enforce laws under which CFPA and FTC both have enforcement authority. Under the original proposal, FTC would have been provided with only limited backstop authority to enforce these laws. The FTC would have been required to refer these cases to CFPA for 120 days and only act if CFPA took no action during that period. FTC made the case to Congress that this referral period would be unworkable and would harm consumers. In his amendment, Chairman Frank strengthened FTC's enforcement authorities, requiring FTC to provide only 30 days notice before initiating a case. Although I had strongly supported the language adopted by Chairman Frank, Chairman Dingell has convinced me that a different structure is preferred. Under the manager's amendment, FTC would be required to provide notice to CFPA prior to initiating a case or at the time of filing if prior notice is not feasible. CFPA would be required to provide this same notice to FTC if it files a case that relies upon these statutes. Third, the manager's amendment clarifies that the authority being provided to FTC to bring actions against those entities that aid and abet unlawful activity is not intended to alter current federal law that addresses the roles and responsibilities of Internet companies for content and conduct of third parties. Most notably, the Communications Decency Act provides immunity to certain entities for content prepared by third parties. This encourages the development of new online services and creates incentives for Internet companies to act responsibly and remove unlawful conduct when it is discovered without the fear of liability. The manager's amendment has added language to clarify that Section 201 does not supersede the Communications Decency Act. This is not a wholesale exemption for Internet companies. Rather, it is recognition that the long-standing legal framework set forth in the Communications Decency Act is not changed by this bill. Fourth, the manager's amendment clarifies that electronic data transmitting or routing is not a financial activity in the circumstance in which an entity is merely serving as the conduit for the transmission of information. In this situation, the entity transmitting the information is not the sender, is not the intended recipient, did not modify the data in any way, and does not treat financial data any differently from any other data sent over its pipes. In this instance, these entities are not engaged in financial activity. Fifth, the manager's amendment makes clear that there will be no automatic transfer of staff from FTC to CFPA. The original legislation called for a transfer of all consumer financial protection functions from FTC to CFPA. This would have led to an automatic transfer of consumer financial protection staff, subject to the requirements of 5 U.S.C. 3503. The current version of the bill transfers much less authority from FTC to CFPA. There is no reason for the FTC to automatically lose staff to CFPA. And finally, the amendment makes conforming changes throughout the legislation to reflect the revisions to the transfer functions provisions that were made in the Committee on Financial Services. It ensures that FTC has full authority over the FTC Act. that CFPA does not take any authority from the FTC beyond that which is transferred, and that FTC can continue enforcement of cases that it brings prior to the creation of CFPA. I urge my colleagues to support this manager's amendment. Mr. Barton.
Mr. Chairman, the minority supports the manager's amendment. We support the substitute of the commission on a bipartisan basis for the director. We support the maintaining of the authority of the FTC. In some areas, primary authority, in other areas, shared authority with the new agency. And we certainly support the maintenance of a jurisdiction in the manager's amendment for the Energy and Commerce Committee.
Thank you, Mr. Barton. Any further comments on this amendment? Mr. Dingell.
Mr. Chairman, I rise to strike the requisite number of words.
Gentleman's recognized for 5 minutes.
First of all, Mr. Chairman, I support the amendment, and I thank you and your staff for the fine way in which you have handled this amendment and for your kindness to me in regard to my suggestions to it. I also want to commend my dear friend Mr. Barton for his cooperation in the statesmanlike way in which he has functioned on this matter. The amendment has one very important part, and that's the Federal Trade Commission's authority to initiate enforcement proceedings under acts enumerated in H.R. 3126. Whereas that bill, as reported by the Committee on Financial Services, would require FTC to provide Consumer Protection Agency 30 days notice prior to an enforcement action, this amendment will allow the FTC to initiate an enforcement action with no waiting period, and moreover requires FTC to provide notice to CFPA only when such action can feasibly so be reported. I am particularly pleased by the amendment's imposition of a reciprocal notification requirement on CFPA vis-a-vis the Federal Trade Commission. I would note that the Federal Trade Commission has had broad authorities in this area which have served the public well over time. And certainly given the behavior of Wall Street of late, the number of rat holes up there which have to be watched can use as many watchers as we could possibly get, as has been shown by the recent events in which Wall Street has caused the tremendous economic recession which the nation confronts. FTC for years has served as an outstanding federal agency. It has been dedicated to the protection of consumers. It is under the jurisdiction of this committee. The amendment will ensure the preservation and furtherance of that legacy at the FTC, much to the benefit of the American people and much to the benefit of American consumers and American industry. I urge my colleagues to vote in favor of this amendment and yield back the balance of my time.
Thank you, Mr. Dingell. Further discussion of the manager's amendment. Are we ready for the vote? All those in favor of the manager's amendment will say aye. Aye. Opposed, no. The ayes have it, and the manager's amendment is adopted. Are there further amendments to the bill? Mr. Barton.
Mr. Chairman, Mr. Chairman, I have a preempt 003 at the desk.
And you would seek to offer that single amendment?
I would.
Okay. Clerk, the clerk will distribute the amendment. Without objection, the amendment will be considered as read, and the gentleman from Texas is recognized for 5 minutes.
Mr. Chairman, this is a very simple, straightforward amendment. It's an amendment we're offering on principle. The principle being, if you're going to create a federal agency, the federal law should preempt state law. Under the pending bill, there is sort of a floor preemption in that you allow states, they have to do as much as in the federal bill before us, but if they want to do more, they can. I don't think that's real federal preemption. So this amendment would simply state that the federal law that would occur if this bill were to become law would preempt the states from acting further in this area. So it is a pure federal preemption amendment.
Gentleman yields back his time.
I yield back.
Chair recognizes himself in opposition to the amendment. I do so with all due respect because I think it is too far-reaching. In the area of consumer financial protection, it's essential that the states have the authority to enact and enforce strong consumer protection laws. The fact is, it's the states and not the federal regulators that have been at the forefront of protecting consumers from unfair and deceptive financial practices. We all know, for example, that the states were light years ahead of the federal regulators in taking action to curb abusive mortgage lending. State actions against Household International, AmeriQuest, and Countrywide illustrate the crucial role states have played in protecting consumers. Currently, federal law already preempts states in certain financial areas, and that has made it easier for abusive practices to flourish. Just think of the credit card market, which is dominated by institutions supervised by federal regulators. Abusive credit card practices exploded over the past several years, leaving Americans drowning in debt. In many cases, states were not able to intervene on behalf of their residents. Their hands were tied by preemption. This is not the kind of consumer protection system that I think we want going forward. Allowing states to implement laws that afford consumer greater protection than provided under this bill is not just good policy. It's absolutely necessary to ensure that consumers are protected over the long term. If the CFPA fails to act or takes decades to act, states should not be handcuffed and helpless to protect their own citizens. So with all due respect, I would urge a no vote on this amendment. Further discussion? Are we ready for the vote on the Barton Amendment? All those in favor of the Barton Amendment say aye.
Aye.
Opposed, no. No. The noes have it, and the amendment is not agreed to. Are there further amendments? First of all, on the Democratic side, are there any amendments that wish to be offered? Okay, it turns out that I have another amendment, so I'm going to recognize myself. The clerk has this amendment.
Right here. I need
Will you report it, please?
Amendment to H.R. 3126 offered by Mr. Waxman. Insert at the end of Section 201.
Without objection, the amendment will be considered as read, and the chair recognizes himself for 5 minutes. This amendment would strengthen FTC's authority to litigate its own cases when it seeks civil penalties against fraudulent actors. Under current law, if FTC wants to seek civil penalties in an enforcement action, it must first refer the case to the Department of Justice. DOJ has 45 days to decide whether it will bring the case on FTC's behalf. FTC can only litigate the case if at the end of 45 days, DOJ decides not to take action. As FTC officials point out, this creates a difficult choice for the agency. It can file a case quickly to stop ongoing harm, but give up the possibility of civil penalties, or it can seek civil penalties but wait weeks before it can file a case to stop conduct that is harming consumers. There is no reason to force FTC to choose between securing an injunction and seeking civil penalties, and there's no reason to ask FTC lawyers to stop work on a case involving ongoing fraud while DOJ spends weeks reviewing the file. Comparable agencies, including the SEC and the CFTC, have the authority to pursue these cases on their own authority without any referral to DOJ, and the legislation before us proposes to give that same authority to the new CFPA. FTC should have all the tools it needs to provide protection to consumers, and I urge my colleagues to support the amendment. Mr. Barton.
Mr. Chairman, I rise in opposition to the amendment.
Gentleman's recognized for 5 minutes.
Thank you, Mr. Chairman. I'll try to be brief. Under current law, the FTC can go directly to federal court to seek injunctions, redress, or monetary damages. However, if the FTC wants to obtain a civil penalty, they are explicitly permitted to seek them, but they must go to the Justice Department, which can choose to file the case on behalf of the United States. If the Justice Department decides not to file the case, then the FTC can file in its own name. Under your proposed legislative change, the FTC would not have to go to the Justice Department first. They could go directly to court on their own. That might not be objectionable if we weren't creating this new super consumer protection agency, and if we weren't creating a new standard at this new agency. This standard, in addition to the unfair and deceptive trade practice standard that exists under current law, there is a new undefined abusive standard. The addition of this term abusive is almost guaranteed to create problems and disparities depending on which regulator seeks to enforce the statute. It's my opinion, and I think a number of people on both sides of the aisle, I hope, share my opinion, that keeping the Department of Justice in the review process as a check is a good thing, not a bad thing. So for that reason, Mr. Chairman, even though you are the chairman, I oppose this amendment.
Gentleman, yield to me.
Be happy to yield.
I understand the check you think the DOJ offers, but I think it becomes not just a check, it becomes an unnecessary delay, and it means the FTC can't pursue wrongdoers who may continue their operations if the FTC can only decide to seek civil money penalties or an injunction. And so I respectfully disagree with you. Are we ready for the question? All those in favor of the Waxman amendment say aye. Aye. Opposed, no.
No.
In the opinion of the chair, the ayes have it.
Mr. Chairman, I'd like a show of hands.
Okay. All members should be aware that we are now about to take a vote by a show of hands. All those opposed to the amendment will raise your hands first. Had to hold his hand up until the battle was won.
Yeah, well, let's count them quick, Mr. Chairman.
Okay, all those in favor of the amendment, hold your hands up.
One per member.
One per member.
Even the majority just gets one hand per member.
Would you be sure that you got everybody over here, because there was one that was up late.
And they also have to be a member of the committee, Mr. Chairman. I think you got us.
Have all hands come on deck? Thank you. Any other member wish to have a hand recorded? If not, the clerk will report the vote.
Mr. Chairman, there were 17 against and 19 in favor.
You won.
19 in favor, 17 against. The motion is agreed to. And is it, well, this is not a roll call vote. So everyone will assume you were here. Further amendments to the bill?
Mr. Chairman.
Mr. Stearns is recognized. You have an amendment to offer, Mr.
I have
Stearns?
an amendment at the desk. It's AA002.
Without objection, the amendment will be considered as read, and the gentleman from Florida is recognized for 5 minutes.
Thank you, Mr. Chairman. I thought I would start out just quickly and talk to council about this, because this basically is an amendment that's trying to put a fixed amount of money on this new CFPC operation. The question for the council is this legislation budget neutral? Just yes or no?
I don't know the answer to that. I don't believe it's been scored.
I think under the current language,
I don't know the answer to that question.
You can't answer this question?
No.
And why can't you answer this?
Well, if the gentleman yield to me, sure. you can't answer a question about budget neutrality until you see what the budget is. This would be an authorization for an appropriation.
Yeah, I know, but
in the amendment, we have such sums as may be necessary. The appropriations would have to decide within the context of a budget and the allocation of money to that particular appropriation.
Well, let me ask the council this. In the event they need more money, the way the language is in the bill, it allows unlimited amounts of funding through 3 different revenue streams. So here we have a brand new government agency And the language is set up so that this agency can have unlimited expenditure. The way I understand it, Council, is the language allows it access to almost unlimited amount because the language is specifically said as such amounts as may be required. Is that true, Council?
Gentlemen, yield to me.
Well, I just want to ask Council if they have.
Well, I have an answer that I think is more appropriate in terms of the congressional context, but the point is this is all subject to an appropriation. So there's not an unlimited tap on money unless the Committee on Appropriations and the Congress of the United States appropriate it.
No, but for
does Council concur in that?
Just retaining my time. When you do an appropriations, you usually have amount of money on it. When you do an authorization, you usually have amount of money. So what you got in this a brand new government agency is an almost unlimited, actually an unlimited amount of funding. And what this would mean, Mr. Chairman, is with the jurisdiction that this new commission has, think about this, members, they can go after banks, thrifts, credit unions, finance companies, mortgage brokers, appraisers, credit card companies, data storage providers, even funeral providers, attorneys, retail stores, and other entities, because they're involved with the regulation of all these people. Is that not true, Counsel, that they can actually tax these people as a form of revenue?
It has broad coverage for assessing fees on
the answer is yes.
depository institutions.
Yes, they have broad coverage, so they have this huge regulatory jurisdiction, and so they can go back under this bill and ask and authorize to be appropriated such funds as may be necessary, and this is providing unlimited access to the taxpayer's dollar. Now, in face of what I think most constituents feel today is that the government should not have a current debt of almost $12 trillion, and we should not have a deficit of $1.6 trillion. So, in a sense, why can't we just agree that this particular agency, to start off, will set a limit of $200 million just to get the CFPA going? And once they go ahead and they say, this is what we need, I mean, we'll spend the $200 million, and then after that, if we need more money, we'll come back here, and then we'll authorize it, and then we'll appropriate it. But it gives Congress at least some minute monicum of control of this. And obviously, if we want to start a new government agency, we should have fiscal responsibility here. And I think this is a good first step. Just hold this particular new agency to some kind of limit instead of giving them unlimited amount of money, and with that becomes a power to tax all those agencies that I mentioned. So I just ask members on both sides to consider at the beginning to put a very defined limit on this agency to get it started, eliminate the language that says such amount of money as they may require, realizing they have 3 streams of different revenues, and they include everything from banks to funeral providers down to retail stores. And with that, Mr. Chairman, I urge a yes vote on my amendment.
Gentlemen, time has expired. The chair recognizes himself. It is not unusual to have an authorization for such sums as may be necessary. That doesn't mean such sums as the world as any one person might imagine. It has to go through the scrutiny of an appropriations request by an administration within the budget adopted by the Congress and voted on by the Congress. But I understand what you're saying. You feel uncomfortable without a number. And oftentimes, maybe usually, we do have numbers. The situation here is we don't really know what number would be appropriate. Let me suggest this to the gentleman. That we work together and find out as best we can before we get to the floor what number would be appropriate, and we put it in there. So it's not an unlimited appropriation.
Well, if the gentleman will yield,
yeah,
I think it's appropriate that we should have some ceiling in here so that members know what we're talking about, because I don't think you want your members or our members to be voting on something that's totally without any limit, particularly for a new agency.
See, I don't look at it as totally without any limit, but I see your point of view, and you want a limit.
Would who's?
Yeah, I've got the time, Mr. Barton.
if the gentleman, whoever has time, would yield to me,
I have to.
I would encourage my friend from Florida to take the chairman at his word, because on this bill, the majority has operated in good faith with us in this markup, and the fact that they're willing to consider some number that's a mutually agreed upon number before we go to the floor, I think is a deal worth taking, because maybe $200 million is too much, maybe it's not enough, maybe it's $300 million, but if we can agree on what a reasonable number is, that is a much better bill to take to the floor than such sums as necessary with the other revenue streams that the CFPA would have the ability to collect. They could collect as much as $1 billion without batting an eyelash under the language that came out of the Financial Services Committee. So,
and as I understand your point, that if they can get money in other ways, we ought to keep that in mind as we set the appropriations amount. I don't know what that would be, but I'm willing to accept some number, and we work on it and see what makes sense.
Will gentlemen yield?
Yes.
I'll be glad to take your offer. Is it possible we could get a CBO score before it gets to the House floor?
We'll try.
Yeah, okay. Well, I think, particularly in light of the ranking member's comment, then I will accept your offer, and with that understanding, then I'll withdraw my amendment. Would that be the appropriate step? So by unanimous consent, Mr. Chairman, then I would withdraw my amendment.
It's not required. If you withdraw it, that's all that's needed. I am informed that we will get a CBO score.
Okay, so that CBO could be scored, could be used part of this authorization.
I thank the gentleman very much for withdrawing his amendment. Are there further amendments? Mr. Stupak, for what purpose do you seek recognition?
Mr. Chairman, I have an amendment at the desk, Stupak 002.
Without objection, the amendment will be considered as read. The gentleman is recognized for 5 minutes.
Thank you, Mr. Chairman. Mr. Chairman, many of our largest banks receive assistance through the Troubled Assets Relief Program or the TARP program, and these same banks are some of the largest issuers of credit cards. While the executives on Wall Street are paid millions of dollars in executive bonuses on the government's credit line, they continue to engage in deceptive and misleading practices that take advantage of consumers and force them to accumulate more debt. I supported the Credit Card Holders Bill of Rights, H.R. 627, which Congress passed earlier this year. Unfortunately, the reforms put into place by this law are being circumvented by credit card companies. Credit card issuers are raising their interest rates, raising minimum payment amounts, and charging extra fees now before the bill takes effect. This is a clear example of credit card users gouging customers, and strong consumer protections are necessary until the Credit Card Holders Bill of Rights goes into effect. In this economic crisis, far too many families are forced to rely on short-term, high-interest credit card debt to pay for food, housing, other basic necessities. In my northern Michigan district, unemployment rates range from 6% to 28%. Families are falling behind on their payments and have fallen victim to the predatory practices of the nation's credit card companies. My amendment is modeled after legislation introduced by Senator Chris Dodd and will immediately freeze interest rates or put a moratorium on credit card balances until the Credit Card Holders Bill of Rights go into effect. For too long, the credit card industry has preyed upon consumers through omissions of honest billing practices and through loopholes in credit regulation that are common among banking institutions. So I'd urge support of this amendment. Mr. Chairman, I have another amendment, which I know Mr. Inslee has the same thing, and I think he's going to offer that one later. So this would be the.
Are you ready to just offer it now? Are you going to withdraw it also?
I would. I understand it is not germane to this legislation we're marking up, so I would withdraw the amendment.
Okay. Gentleman withdraws his amendment. You said you had another amendment?
I'll let Mr. Inslee is going to handle that one. We had the same amendment.
Okay. Good. Thank you. Mr. Radonovich, you are seeking recognition for the purpose of offering an amendment?
Yes, thank you, Mr. Chairman.
Without objection, your amendment will be considered as read, and you're recognized for 5 minutes.
Be Rule 004, the preservation of Magnuson-Moss rulemaking.
And the chair will reserve a point of order just in case.
Thank you, Mr. Chairman. If I may, the Title II repeals Magnuson-Moss rulemaking procedures for the FTC and which has been subject to that since the 1970s. Those rulemaking procedures were instituted by Congress to ensure the FTC's rulemaking had been thoroughly considered given the vast jurisdiction of the FTC over the broad range of industries subject to the FTC's authority. Congress passed the Mag-Moss procedure because of concern that the FTC had moved too fast, and also to ensure the ramifications of its rulemakings would be discovered and considered. Under the Administrative Procedures Act, the FTC will be allowed to forego the procedures required under Magnuson-Moss. I have sympathy for the argument that the existing procedures are burdensome, but given the breadth of the entities subject to the FTC's jurisdiction, I can understand why our predecessors want to ensure thoughtful rules were promulgated taking into account the various intricacies of the industry. One look at the exemptions provided to different industries under the CFPA, and we can understand that this is even more relevant today that with industries spanning the gamut from small independent stores to huge companies that only operate in online space. They are different than the one-size-fits-all rules that never work. Accordingly, rules should be thoughtful and thorough, and keeping with the existing rulemaking will ensure that all relevant information is considered before the industry is regulated. The FTC may be under the belief that initiating and completing a rulemaking under Magnuson-Moss is difficult, but it's not clear that they have attempted any new rulemakings in more than a decade. Preserving the existing requirements is good policy, and I urge all of my colleagues to support it.
Gentleman yields back the balance.
Would the gentleman yield to me?
Yes.
Before we yield back?
Yield to.
I just want the members of the committee to realize that this Magnuson-Moss provision has been in law since the 70s. It was put in by a Democrat Congress because a prior FTC, which has jurisdiction over all interstate commerce, was proposing all kinds of rules that were in the consideration of the Congress at that time beyond its scope and beyond what they should be doing and interfering with other regulatory agencies. So Magnuson-Moss was put in place to make sure that the FTC more closely adhered to its primary authority, and there's no evidence that there's been a problem. So in the other committee, when they repealed that, it to me appears to be just, as my good friend Chairman Dingell would have said, mischievous. And I would hope that we could agree on a bipartisan basis to support the Radonovich Amendment, because that maintains a status quo that, in my opinion, has served the country well for the last 30 to 40 years. With that, I appreciate being yielded to.
Thank you, Mr. Chairman. I yield back.
Chair recognizes himself. If it ain't broke, don't fix it. But it is broke. The FTC has to go through a rulemaking process under Magnuson-Moss, which is highly burdensome. And we've seen this in recent years. For example, rulemaking conducted under Magnuson-Moss, the credit practices rule took 10 years to complete. Congress granted FTC the authority to issue rules under the Administrative Procedure Act multiple times, and the FTC has demonstrated its ability to use this authority appropriately. They need to be able to respond, and for example, under the current rulemaking limitations, the FTC was prevented from adequately addressing the financial problems of the last 3 years. Neither Mr. Magnuson nor Mr. Moss nor the Congress in the 70s would have imagined the situation that we are now in. And they would have wanted the FTC to act quickly and appropriately, but also quickly, not just take 10 years to get around to it because of the burdensome rulemaking requirements. In order to address emerging consumer protection issues, the FTC must be able to act quickly to issue rules defining unfair and deceptive practices and acts. The legislation before us gives the CFPA the authority that I think the FTC ought to have. There's no reason the FTC ought to be saddled with additional procedural hurdles that other agencies do not have. Other independent agencies, including FCC and SEC, rely on the APA procedures. If it's good enough for them, and we've seen the problems with the FTC's inability to act appropriately and quickly enough, I think we ought to change it and defeat this amendment. Any further discussion? If not, let's proceed to a vote. All those in favor of the Radonovich Amendment will say aye. Aye. Opposed, no. No. Opinion of the chair, the noes have it. The amendment is not agreed to. Are there further amendments? Mr. Inslee? For what purpose do you seek recognition?
To offer amendments Inslee 2 and 3.
Inslee, two separate amendments?
Yes, 2 and 3. I'll offer them en bloc, and I will be withdrawing them if I may ask.
Without objection, the 2 Inslee amendments will be offered in block. And
Mr. Chairman, just in case, I'd reserve a point of order.
A point of order is reserved just in case the offerer does not withdraw it, as he suggested he would.
No, he will.
But without objection, the amendments will be considered as read, and the gentleman from Washington State is recognized for 5 minutes.
Thank you. Mr. Chair, we need to equalize the threshold for coverage by this bill between the banking institutions and the credit union institutions. For reasons that at least are not apparent to myself, they are vastly distinguished, with the credit unions being subject to this bill at a threshold of 1.5 billion assets, and the banks not till $10 billion assets. Clearly, the credit unions were not somehow a more culpable party or a more responsible party in the meltdowns we have than the banks, and I fail to see a justification for exposing the credit unions to what could be considered a competitive disadvantage, in that they would be exposed to this level of regulation sooner at a lower level than the banking institutions. So our amendment would seek to equalize the treatment of those two parts of our financial industry, and we will be pursuing this at a later date. This apparently runs into jurisdictional problems at the moment, but I want to alert my colleagues we will be pursuing that issue as the bill progresses. The second amendment we have would essentially reinstitute the Glass-Steagall provisions that were repealed in the Graham-Leahy-Bliley bill. And I have to say, and I hope others will be thinking about this, about whether or not we have really brought a little bit of weak tea to this party on really solving the problem that resulted in this huge collapse. Because the fact of the matter is that after the collapse, the financial services industry has become more concentrated. We have more banks that are too big to fail today than we did essentially before. This consolidation of the industry has again exposed us to the fact that the community at large will be responsible for the irresponsible risk-taking of larger financial institutions. And yet at the moment, unless something changes and enough members get interested in this subject, we're not going to deal effectively with the issue of the size of the institution. And it is my belief that no matter how rigorous our regulatory structure is, as long as the institutions are so large that they are able to take risks with our money, there will be a moral hazard that cannot be alleviated, and we will be on the hook for their failure. And that is the situation unless something changes. So as a first step in addressing this issue, I hope that we will be seriously considering restoring those Glass-Steagall provisions that I voted against repealing several years ago with Mr. Dingell, and indeed he was a prophet. I don't ascribe that exalted status to me, but I do to Mr. Dingell. And we have seen the fire that can happen if we don't deal with size of these institutions. So we would withdraw this at this time, but I hope other members can become interested in this issue. Thank you.
Gentleman withdraws the amendment. Are there further amendments?
Mr. Chairman.
Mr. Radonovich, you're recognized for another amendment.
Thank you, Mr. Chairman. That would be Rule 005, the FTC APA.
Without objection, the amendment, well, the clerk's about to report it.
Amendment to H.R. 3126 offered by Mr. Radonovich. Page 355, line 23. Insert after the
Without objection, the amendment will be considered as read, and the gentleman from California is recognized for 5 minutes.
Thanks, Mr. Chairman. I want to thank you and also let the committee know I co-authored this with my friend from Georgia, Dr. Gingrey, and want to yield him some time to speak on this.
Mr. Chairman, I thank the gentleman for yielding, and as a co-sponsor of the amendment offered by the ranking member of the Commerce, Trade, and Consumer Protection Subcommittee, Mr. Radonovich, I'm very supportive of the amendment. Basically, Mr. Chairman, we
heard what you said in regard to the previous amendment that Mr. Radonovich submitted, and that would make Magnuson Moss rulemaking remain in existence rather than rulemaking under the Administrative Procedures Act. The point being that the FTC, with such broad jurisdiction over so many industries, it was appropriate, based on 1970 decision by the Senator Magnuson and Representative Moss, that to make it difficult, that it should not be so easy to change these rules. And I, of course, heard your objection to that amendment. This amendment basically kind of splits the difference. It is a hybrid of the two. Mr. Chairman, I'd like to use the testimony of former FTC Chairman Timothy Morris at a July 14th hearing before the Senate Commerce Subcommittee on Consumer Protection and Product Safety. In that testimony, the former chairman urged the subcommittee to maintain the rigors of MAG-MOS. He stated that changing the rulemaking procedure would, and I quote, eliminate the requirement that unfair or deceptive practices must be prevalent, unquote. So, Mr. Chairman, this is why I am a co-sponsor of this amendment with Ranking Member Radonovich. I understand the concerns brought by opponents of MAG-MOS that the FTC needs to have the ability to act more swiftly moving forward, as you pointed out. However, at the same time, we need to ensure that there is some empirical need to promulgate rules. Mr. Chairman, I believe that this amendment addresses these concerns by implementing the APA structure of rulemaking, but it also adds a degree of further scrutiny by requiring the FTC to perform additional analysis on the final rule, weighing the economic impact that will have on the industries the FTC will be regulating. I think adding this scrutiny, in my opinion, will ensure the integrity and the rulemaking procedures utilized by the FTC. I believe that this is a common sense amendment that tries to find certainly a middle ground between MAG-MOS and APA rulemaking. And I want to thank Ranking Member Radonovich again for his leadership on the issue. I think it's a good amendment, and I urge all my colleagues to support it. And I yield back to the Ranking Member.
Mr. Chairman. Thank you, Dr. Gingrey. The FTC cannot be expected to be an expert in every industry under their jurisdiction or know the intricacies of different business models. This amendment simply acknowledges that fact and requires them to show that they have considered all of the benefits and alternatives and that their rule is based on sound facts.
Mr. Chairman. Gentleman yields back his time.
I yield back.
Yes, thank you. Yes, Mr. Rush, you're recognized for 5 minutes.
Mr. Chairman, I thank you for recognizing me. I oppose this amendment, and I speak in opposition to it. In multiple hearings this year, the Subcommittee on Commerce, Trade, and Consumer Protection heard about systemic burdens facing the FTC that prevent it from becoming a nimble, proactive consumer protection agency. In order for the FTC to be able to respond to changing market conditions and to give direction to the market about what practices are unfair and deceptive, it must have the same rulemaking authority that other federal agencies use. The Administrative Procedures Act requires a clear framework for notice and comment rulemaking. It requires agencies to consider alternative views. The amendment before the committee would place new and different burdens on the FTC as it issues rules. It is time that we allow the FTC to operate like other federal agencies and issue rules without additional burdens. Congress has given the FTC APA rulemaking authority many times in the past, and the FTC has a proven track record of careful deliberation. The obligations laid out in this amendment are unnecessary. Mr. Chairman, we need to fight to ensure that the FTC remains a lean, mean fighting machine. With that, I yield back the balance of my time.
Yield to me.
I yield to the chairman.
I want to point out that a lot of the things that this amendment would require the FTC to do, they already do. But once you put it in statute, you invite litigation on every step of the way. And so I join you in opposing the amendment. Further discussion of the amendment. All those in favor of the Radonovich amendment will say aye. Those opposed will say no. No. In the opinion of the chair, the noes have it, and the amendment is not agreed to. Further amendments? Who do you want me to recognize? Mr. Burgess. Mr. Burgess, you have an amendment?
Yeah, Burgess Amendment number 2.
Without objection, the amendment will be considered as read, and the gentleman's recognized for 5 minutes. And the chair will reserve a point of order just so we can get a chance to see the amendment.
Since the Radonovich amendment was not accepted, this is one that tries to still further refine that point, and the amount of civil money penalties shall be increased 25% per violation per day unless the FTC's authority to use Administrative Procedures Act is granted, in which case the amount of civil monetary penalties remain at current levels. Under the Civil Penalties Inflation Adjustment Act, the Federal Trade Commission is required by law to make adjustments to the amount of civil penalties as indexed to inflation no less than once every 4 years. The civil penalty amounts adjusted by the FTC are set forth in the Commission rules, and this process undergoes notice and comment rulemaking in the Federal Register. This past February, under civil law, civil penalties issued by the Federal Trade Commission went up to a maximum of $16,000. This amendment would grant the Federal Trade Commission a one-time increase across the board of 25% of all civil penalties allowable under the Federal Trade Commission. However, this would be contingent on the Federal Trade Commission continuing the Magnuson-Moss rulemaking instead of the easier Administrative Procedures rulemaking. The more deliberate 8 to 10 year time frame for Magnuson-Moss is critical since the Federal Trade Commission has such widespread jurisdiction. Significantly reducing the time frame from 8 years to a few months should not be allowed, and if they are allowed to this easily promulgate rules, then they will not need the stiffer penalties since there will be more types of penalties than they can issue. Ultimately, we need to prevent bad actors from acting bad again. This will allow the Federal Trade Commission to punish bad actors at the same time having a deliberative period needed to ensure the rulemaking is common sense and logical. I'll yield back my time.
Gentlemen, yield to me.
I'll be happy to yield to the chairman.
I'm a little confused. You're saying that it appears that you're saying you want Congress to ensure that FTC is granted rulemaking authority under the APA. But then on the other hand, it seems like you're saying that if they don't get that rulemaking, you'll allow the amount of civil money penalties to increase by 25% per day until FTC is granted rulemaking authority. Why do you want rulemaking? And of course, that's what the underlying bill does. It gives rulemaking authority.
The intent would be to use the more stable time frame under the Magnuson-Moss period. The 8 years. Give the FTC a one-time adjustment of 25%, and then as opposed to the administrative procedure, allow the penalties to be increased under Magnuson-Moss only under that 8 year time interval.
So you don't want an APA rulemaking?
Correct.
I see. Well, I think that's where we have a disagreement. I think the FTC ought to have it, the same as other agencies, and I don't want to reward them for not having it because I want them to have it.
But with the expansion of the powers under this act, the intent is to provide a little, yes, give them, no one wants bad actors to not act badly in the future. We want the penalty to be certain. We want the penalty to be something that everyone wants to avoid. But at the same time, because we're expanding the jurisdiction so widely, let's put some certainty into how those penalties will be assessed and adjudicated.
Well, it's not clear which agencies assess civil monetary penalties would be increased, the FTCs or the CFPAs or some other agency. Would the civil penalties assessed against all defendants be impacted or only some? And similarly, is it civil penalties for violation of rules or also violations of the FTC Act that you would allow to be increased?
Well, reclaim my time. It would be under the Federal Trade Commission.
So you're planning it only under the FTC itself?
That is correct.
Well, with all due respect, we disagree on this amendment, and I would have to oppose it in its current form. Further discussion? If not, then we'll proceed to a vote. All those in favor of the Burgess amendment will say aye. Opposed, no. No. Opinion of the chair, the noes have it, and the amendment's not agreed to. Are there further amendments?
Mr. Chairman.
Mr. Walden? Mr. Walden.
Thank you, Mr. Chairman. I have an amendment at the desk. It's CFPA _ 002.xml, I believe.
Oh, that one. Yeah. Without objection, that amendment described by the author will be considered as read, and he will be recognized for 5 minutes.
Thank you, Mr. Chairman. I want to thank my colleagues on the committee for their well wishes when I was battling the flu. I am back. I am healthy. I follow the CDC guidelines, but you wouldn't know it by the defection of the colleagues around me today. Hi, and the others who will now flee. I appreciate it. Mr. Chairman, in a serious note, the terms, this deals with the word abusive. The terms unfair and deceptive in the language in the legislation are fairly well understood in the consumer protection context. Prosecuting acts or trade practices that fall into these categories, of course, has been part of the FTC's mission for decades and decades. The term abusive, however, is a new one. And the question is, what does it mean? What enforcement actions or case law have fleshed out this concept? And frankly, as near as we can tell, the answer is none. In the bill before us, everywhere unfair and deceptive are used, abusive also appears. But as I read the bill, there is no definition in this bill for the term abusive. Furthermore, given that the CFPC could interpret this new term however it likes, entities that are regulated would have no idea how this new commission might enforce this newly added word abusive. We must give business certainty about what behavior is unacceptable and that which is allowed. Additionally, and even more confusingly, given that the FTC would share enforcement authority over some of the laws involved here, not only would this new term affect the new commission, but it could have perhaps far-reaching implications for how the FTC enforces its laws. In this context, entities that know the rules of the road at the FTC and have always been on the right side of the law would all of a sudden be presented with the real uncertainty about how the FTC might change its enforcement under the interpretation of the new term abusive. There's absolutely no problem with the current unfair or deceptive framework, and I would argue no reason to confuse the situation by adding this new undefined term abusive and deferring to the proposed new commission to define it, a term we've never used in this context. So, Mr. Chairman, you made a comment earlier about we don't want to drive unnecessary litigation. My concern is that putting this new term that's not defined into the law will cause not only confusion but perhaps unnecessary litigation. It's unclear, subjective, and unnecessary, and I hope you'll join me in cleaning up this part of the bill. And I would, unless anybody on our side wants to comment, I'd yield to the chairman, of course.
Thank you for yielding to me. It seems like you want to strike the language abusive.
Just that word.
Yeah, and the word abusive, which says that there would be a prohibition of unfair or deceptive practices, unfair or deceptive acts or practices as necessary to permit CFPA to address harmful conduct that does not neatly fall within the categories of deception or unfairness. So that's why we have the word abusive. There are cases where a consumer who suffered an economic harm as a part of a financial transaction may have received some form of disclosure. So they got a disclosure, but it was grossly insufficient to warn them of the potential injury. This may have been the cause of the complexity or the timing or the format or the presentation of the disclosure or other circumstances designed to take advantage of or dupe a consumer. Consumers seeking credit are particularly vulnerable and often are susceptible to overreaching and underhanded tactics of fast-talking, self-proclaimed experts. Because some disclosure was provided, neither unfairness nor deception may capture this conduct, but it's not any less harmful. And that's why we have this word abusive. Other examples of potentially abusive financial practices include retroactive rate increases, multiple over-limit fees for given payment cycle, high-pressure sales tactics of various types, unscrupulous creditor collection practices, collecting debt that has been discharged in bankruptcy.
Mr. Chairman, if I
yes.
could just reclaim.
Yes.
And I appreciate your enunciation of what you think abusive might include. My point is that nowhere in this manager's amendment or in this act is it defined in law. So you and I could probably agree what we think are abusive practices, but this bill does not define that term, and since it's a new term that the Commission would be using, I think it's incumbent upon us to do the heavy lift to tell them what we think abusive means. And since that's not done there, and since we're then delegating that, I think it creates some real uncertainty that could be problematic going forward. We know what deceptive and unfair tactics are, and I know my time has expired. So,
the gentleman's time has expired. The chair recognizes himself in opposition to the amendment. I oppose the amendment because it limits the authority of the CFPA by striking the term abusive act or practice from Section 131 of the bill. If we strike that language, I think it would needlessly limit the authority of a consumer protection agency to act on behalf of American consumers. This is not a new term. We recognize that this type of authority is needed in other statutes, including the Telemarketing and Consumer Fraud and Abuse Prevention Act and the Truth in Lending Act, both of which address abusive conduct. If ever there was an agency that needed this authority, it's the CFPA, that's designed to protect consumers during financial transactions when they are at their most vulnerable. So I would urge that we oppose this amendment. I think we've already had it in the law. I think we see a reason to put it in because this new agency might otherwise be too limited, and therefore I would urge a vote against the pending amendment. Any further discussion? If not, let's proceed to a vote. All those in favor of the Walden Amendment say aye. Aye. Opposed, no. No. In the opinion of the chair, the noes have it, and the amendment's not agreed to. Further amendments? Mr. Stearns.
Thank you, Mr. Chairman. I have an amendment at the desk, which I think is 001.
Without objection, the amendment will be considered as read, and the gentleman from Florida is recognized for 5 minutes.
I've got a question for counsel. This amendment, I would hope the chairman would consider, like he did with my last amendment, perhaps we could reach an agreement here because the power that's given to this new commission is immense. The question I have for the council is, as I understand, there are exemptions in this bill for merchants, retailers, and auto dealers. Is that correct? Are there any others that have exemption under the bill besides those?
There are several other exclusions.
Accountants and taxpayers?
That's correct.
Real estate brokers and agents?
Mr. Chairman, could the council get a little closer to her microphone? It's just hard.
Be sure the mic is turned on and be close enough to it so we can hear.
Yes, sir.
Now, are attorneys exempt from this bill? Lawyers?
In some instances.
Some or what? All or not?
Some, sir.
Define some. I had the impression that all lawyers are exempt from this bill. Am I wrong about that, counsel? Someone said only the good ones. Is there another counsel that could help us, perhaps?
I believe that it depends on the services they're providing. I'm pulling up the exact line right now.
So we have accountants, taxpayers, real estate brokers, agents, lawyers, auto dealers, and I say also providers of IRA plans, 529 plans, and pension plans. Is that true? They're also exempt?
That's correct.
Okay. But in light of that, when you read the bill, there's language that said that the commission itself can go back and redefine a financial device so that they can say there's a catch-all language, as I understand it, that allow the director of this commission to further extend the definition of a financial activity to include any other activity that the commission would like to decide is a consumer financial product. Is that correct? That language is in there?
There are several things they need to find in order to determine something to be a financial activity, but yes, that's correct.
No, but it's a catch-all language that's saying, notwithstanding the fact that all these people are exempt, if this commission indeed says, okay, let's look at auto dealers, their transactions, they could say, well, we're going to go back and look at them. And so you have 3-2 vote, and bingo, they go back. So all these people would not be exempt because you've given the commission this huge amount of power to go in and change definitions, you know, and extend the definition of a financial activity and a financial device. So I think, Mr. Chairman, we should define what this commission does precisely, exact its activities, and make it justify its actions, and not should have the language that all these people were thinking, well, I'm not under this bill. Bingo, the commission can put them all under the bill, including attorneys. So I would suggest, Mr. Chairman, that you consider my amendment as a way we could work together to change the language so that this commission doesn't have this overall authority that extends, that they can come up with their new financial activity that they define, the bill doesn't define, and this commission can go after these people that are now exempt. And I would yield to the chairman.
Yeah, would you yield to me?
I would yield.
Because I am sympathetic to what you're saying here. But I think your amendment goes too far, and I don't have a suggestion on a middle ground. They have some pretty vague language, it appears to me, in the provision coming out of the banking, former banking
Chairman,
committee.
what we could say is, maybe by unanimous consent, that these are the only activities they could do without them coming back to Congress to explain this new umbrella financial activity they want to do. Maybe we just change my amendment to say that they can only do it after they come back to Congress. Otherwise, all these people who are going to think they're exempt, they're not going to be exempt.
Well, the definition of financial activities is expansive, and this provision appears to allow CFPA broad latitude to defining activities as financial. But the agency can define a financial activity, nearly anything that has a substantial likelihood of having a material adverse impact on the creditworthiness or financial well-being of consumers. I think that's too broad. So I'm sympathetic what you're trying to do, but I think your amendment goes too far because you would permanently freeze the definition of financial activity. We live in a world that's changing rapidly. New technologies arise every day. The new ways of conducting financial activity are regularly being developed. So I don't want to prevent this new agency from responding to changing times, but I understand what you're saying, and I'm troubled by it as well. I'd be happy to work with you. I'm not sure that we'll be successful in working together.
Well, Mr. Chairman, I think any one of us would like to be in charge of a commission with this power that simply redefine activities, financial activities, based upon what we think. So I'd suggest.
Well, if the gentleman would permit,
I mean,
maybe you would like that kind of power, but I wouldn't. Oh, you would not like that kind of
Okay, I wouldn't either. Quite frankly, I wouldn't. But I think as members of Congress, and you're the chairman and Mr. Barton is the ranking member, and you folks sit down and think we're going to exempt X, Y, Z, and in bingo, the bill passes, those people won't be exempt. I think we have a fiduciary responsibility to protect these people if they're exempted. There's a reason why they're exempted. I mean, you know, I don't know all the reasons why all these people are, but I'm taking on good faith that all these people should be exempt. And so I think we have a responsibility to say these people are going to be exempted, period. And the language should be such that if there is a change to it, then they have to come back here and explain it, and there has to be legislation. But you can't let these people run off and legislate at a commission based upon what Congress said, and they overturn it. That make sense?
Would the gentleman...
let me ask, the gentleman's time has expired. Let me ask unanimous consent the gentleman be given 3 additional minutes. Well, let's say, okay, 3 additional minutes, and you can yield to Mr. Barton on your time. Without objection.
Mr. Chairman, do you think it's possible that Mr. Stearns and yourself and perhaps other members could work maybe with Mr. Frank and Mr. Bacchus between now and the floor and see if you couldn't tighten up so that we have a general meeting of the minds?
Well,
because you seem to be somewhat supportive.
I'm sympathetic, and I'd certainly be willing to do that. I can't guarantee that we'll get there, but I
guarantee an outcome. But if you could guarantee a process,
well, I would be willing to be part of that process.
Ms. Stearns, would you?
Well, I think that's encouraging, Mr. Chairman, and I appreciate your receptivity. Obviously, that's better than nothing here, and so I'm very willing to support it. But I think almost everybody on this committee would agree that giving a government agency full power after we've specified who's exempt and that they could do away with that exemption is not the intention of this bill. And I think that probably put fear in some of these people I said that are now thinking they're exempt. So I appreciate it. And with that, Mr. Chairman, unless Mr. Barton or yourself.
No, I'm just serving as a mediator and facilitator, and hope I get 10% of the money saved and account in Switzerland if it's successful.
With that, Mr. Chairman, I ask unanimous consent to withdraw my amendment in the hopes of reaching better language.
The gentleman withdraws his amendment. Are there further amendments?
Mr. Chairman.
Who goes? Mr. Terry, I'm told, has an amendment.
Thank you, Mr. Chairman. I have an amendment at the desk. It is AG 002.
Without objection, the amendment will be considered as read. The gentleman from Nebraska is recognized for 5 minutes.
Thank you. This is a pretty short amendment. Just simply eliminates two words, monetary or. And what does that do? In regard to the state's rights through their Attorney General to be able to also proceed or perhaps act as the state agent for the federal agencies to do their investigations into consumer activities that would fall under this act or anti-consumer activities that would fall under this act. What occurs by removing those two words is removes the penalty, monetary penalty ability of state AGs. It keeps intact their ability to do injunctive relief, but by removing the AG's ability to levy the monetary civil penalties, we keep one federal agency, the FTC, since we've made sure in this bill that they have the power to level the civil penalties, one agency that deals with that instead of having 50 different states dealing with the same bad act in 50 different penalty ways. So we consolidate this power with the FTC. That way we eliminate the arbitrary and capriciousness that could wildly have wild swings of penalties for the same act. There'd be consistent penalties. They would know what the bad actors could know what their penalties would be like. I think this is an important part of the overall justice. It also then would remove the chance for there to be 51 penalties as well. But I think it's important that we have just one agency in charge of the penalty phase. So that's as simple as it gets. If there's anyone that I could yield to on this.
I just
Mr.
support, if you'll yield to me, I support
Mr. Barton, I yield to you.
I think it makes sense. It maintains the principle of the federal government having to enforce the statute, and I think it makes sense.
Thank you.
Gentleman, yield back his time.
I yield back my time, Mr. Chairman.
Chair recognizes himself in opposition. The bill, H.R. 3126, gives state attorneys general the authority to secure monetary or equitable relief for violations of this bill. States must have both tools in their enforcement. Most states must have both tools in their enforcement tool belt to effectively protect consumers in the financial services arena. If a bad actor is not hit financially, he or she can just set up shop again under a new name. It's unnecessary and unwise to eliminate states' abilities to seek monetary relief. Federal regulators alone simply do not have the staff or resources to police the entire marketplace, and state AGs are a critical enforcement partner. The states need the authority to seek the same relief as federal regulators and should not be needlessly hamstrung by an arbitrary and misguided decision to limit them to equitable relief. Unfortunately, for some bad actors, the risk of equitable relief may just be the cost of doing business, or a risk worth taking in order to reap fast and huge profits at the expense of American consumers. States have the authority to seek monetary relief in other consumer protection contexts and have used this authority responsibly to benefit American consumers. In the face of the current financial crisis, we should be seeking to enhance the authority of the states, not scale them back. And for that reason, I disagree with the gentleman and would oppose his amendment.
Would the gentleman yield 30 seconds for rebuttal?
Yes.
The FTC would still have the power to levy a fine, a civil monetary penalty. If there was none levied and there was only the equitable remedy of injunction, then that would be the FTC's decision not to levy a civil penalty. With that, I will yield back.
Reclaiming my time, the FTC can act, but I want the state AGs to be able to act as well. Are we ready to proceed to the vote on the Terry Amendment? All those in favor of the Terry Amendment will say aye. Aye. Opposed, no. No. In the opinion of the chair, the noes have it, and the amendment is not agreed to. Mr. Scalise, you have an amendment?
Yes, I do, Mr. Chairman. It is at the desk, CFPAEC-006.
Without objection, that amendment will be considered as read, and the gentleman is recognized for 5 minutes.
This amendment would require that the GAO do a study both 3 years after and 6 years after implementation of this bill to determine and to list out the impacts on small businesses. While I oppose this legislation, it does give very broad new regulatory powers to this new agency, and as we've seen in the past, small businesses in many cases take an unfair increase in the impact to them. In fact, federal regulations have shown, according to the Small Business Administration firms, that federal regulations cost small businesses with less than 20 employees more than $7,647 per employee.
Mr.
So this would
Scalise,
require
will you
a
yield
study
to me?
done on 3 years and 6 years after implementation.
I think your amendment makes a lot of sense, and I would like to join you and urge members to support it.
Then with that, I'd yield back.
Any further discussion? If not, we'll proceed to the Scalise amendment. All those in favor say aye. Aye. Opposed, no. The ayes appear to have it. The ayes have it, and the amendment's agreed to.
Mr. Chairman.
Radonovich, you have the last amendment, I understand?
Yes, I do. I have two on block. I'd like to do on block amendments.
Without objection,
to offer and withdraw.
Mr. Radonovich has two amendments he'd like to proceed to offer en bloc with the expectation you're going to withdraw it, and so therefore no point of order would be necessary, and after that we'll go to final passage. Gentlemen's recognized. Without objection, the amendments are considered as read, and the gentleman's recognized.
Yes, I'm sorry. They are CFPA 1 and T2001. Radonovich 001, CFPA.
Gentleman's recognized.
Thanks, Mr. Chairman. And I want to begin by thanking you again, Mr. Chairman, and the majority for working with us to include conduit language in the manager's amendment. I look forward to working with you and with you further to strengthen the language. The first amendment that I'm going to be offering will be telephone service provider exemption. My amendment would explicitly exempt telephone service providers from any new rules proposed by the agency. I think that we can all agree that the telephone service providers like Verizon and AT&T did not cause last year's financial crisis. In Section 101(8) of the bill, a covered person is defined as any person who engages directly or indirectly in a financial activity. Section 101(18) of the bill lists a number of activities that are defined as a financial activity, including the extension of credit, the collecting of debt, financial data processing, and the catch-all, any activity that the director defines by regulation as a financial activity. Telephone service providers definitely do extend credit, collect debt, and process financial data, and I don't think that we should have them included in this bill. This is one small example of the many problems with this legislation and the wide net that our colleagues seek to cast out over our entire economy. Telephone service providers had nothing to do with the financial crisis, and we should all vote to exempt them from this new and onerous regulation. Mr. Chairman, my second amendment goes to strike Title II, the improvements to the FTC Act. This committee has historically been strong on regular order. There is a reason that we go through an oversight hearing on a particular issue, followed by a legislative hearing and then a markup at subcommittee and full committee to ensure that the well-reasoned and considered piece of legislation. This regular order is even more important when it comes to something as important as creating a new bureaucracy in an area of such great importance. As a subset of this legislation, we are working to consider what appears to be small but are actually sweeping changes to Title II to how the FTC operates and their available authorities in three specific areas. Congress obviously had grave concerns about the initial rulemaking authority of the FTC, so much so that they instituted a special Magnuson-Moss procedure to ensure the Commission's rules are thoroughly considered and vetted, giving the broad range of the Commission's authority. Title II repeals these requirements in favor of APA rulemaking. Additionally, this legislation creates a new liability under Section 5 for unlawful assistance that is recklessly provided. This is a standard that has no definition. Finally, under Title II, the legislation authorizes the FTC to bring civil penalties and enforcement actions for unfair and deceptive acts or practices without the violation of a rule. Given the new standard of a new undefined concept of abusive under the CFPA, this may or may not impact the FTC's Section 5 powers in terms of precedent. I do not intend to imply that these may not be meritorious changes, but they are worthy of in-depth discussion in the appropriate conversation. And that conversation is in an FTC reauthorization bill that proceeds through this committee in regular order, not something added by another committee without jurisdiction and our only resources to seek to strike the provision. I urge all my Energy and Commerce colleagues to support the prerogative of the committee and consider these changes at the appropriate time. Mr. Chairman, I want to thank you for offering these, and I do withdraw.
Thank you very much, Mr. Radonovich. The gentleman does withdraw his amendments in block. We will now proceed.
Mr. Chairman?
Yes.
I would like to just say a couple things on that behalf of Mr. Radonovich. Is that possible?
Gentleman's recognized.
Okay.
For
and Mr.
strike
Rush,
the last
you might
word.
also want to think about this. You're chairman of this committee where the Federal Trade Commission has jurisdiction, and Mr. Radonovich is the ranking member. And what has happened here, the financial services has taken over and done away with regulations that the Federal Trade Commission had in place and replaced it with this administrative procedure action, which totally does away with the Federal Trade Commission's procedures. And this all came through without going through your committee and Mr. Radonovich's committee. And having been a former chairman of that committee when the Republicans were in the majority, I think, you know, we had in place a procedure, and the Financial Service Committee now is just throwing it out the window and taking it over. So, you know, at some point, Mr. Chairman, I think you and the full chairman, Mr. Waxman, has to realize that we got to see what they're doing and make sure that the Federal Trade Commission's prior procedures are I think, perhaps better than what's being done here, and that we're losing some kind of oversight. So that's, I just bring this attention that we're losing a little oversight that we had through the Federal Trade Commission on these administrative procedures. For what it's
well, the gentleman would yield.
Yes.
I understand your concern, and I think by our actions today, we're affirming the fact that we're going to be very much involved in this issue. We're not ceding our oversight or legislative authority. Yes, Mr. Rush.
Mr. Chairman, I also want to add to your comments. I think that not only are we have we maintained firm oversight over the FTC, but I also think that we've enhanced our jurisdiction and enhanced our abilities to allow the FTC to do its job in a broader array of activities, with a broader array of activities. And I just think that you should be commended, and the full committee, once this passed, should be commended, because this is indeed protective of our jurisdiction and also enhances our jurisdiction. And I yield back.
Thanks. Thank you very much. The motion now
Mr.
is...
Chairman.
For what purpose the gentleman seek recognition?
I seek recognition to ask two questions of counsel before we move on.
Well, we're ready to vote the bill out on final passage, but I'll recognize you for 5 minutes to
I thank the Chairman for his indulgence.
And I would hope that we'd have no other requests, because I know members have other obligations.
Well, Mr. Chairman, it's important, because when we passed 4040 and the CPSIA out of this committee and it was voted on the floor, it was full of unintended consequences which have come back to really vex people. And really the first question I would have is, under the Regulatory Flexibility Act, I'm not finding that this bill has to conform to the Regulatory Flexibility Act. Am I just missing that in my read of this bill? And I realize we haven't had it very long, and so my reading has been pretty perfunctory. But looking for the Regulatory Flexibility Act provisions.
Gentleman yield.
Yes.
I do believe that this is an agency, and it would apply to the actions of this agency.
Well, I guess the question for counsel is, if it's not specifically included, are those regulations specifically excluded? The regulations of the Regulatory Flexibility Act.
I'd have to look at the act to be certain, and I don't have that in front of me, but I believe as an agency it would be subject to the act.
And then further, if indeed that is the case, is there any way we can make certain that this goes under the regular order of notice of proposed rulemaking rather than by certificate, which is what happened with 4040, which has then led to all the difficulties we have with resale shops, libraries, ribbon manufacturers, motorcycles, et cetera?
If counsel has an answer, if not, we'll get an answer for the gentleman.
Just Mr. Chairman, we do need to be certain about that, because we are still living under some of the unintended consequences that occurred with passing 4040. The other question I would have of counsel is, on my read of this bill, there is a specific exclusion of financial products. It actually specifically excludes companies like AIG, insurance companies. Am I reading that correctly?
It specifically excludes the business of insurance, but large companies like AIG, I believe, had a wide range of practices, and if they conducted any financial practices as defined in this act, it would not exclude them.
So the language in the bill that excludes insurance companies would not be so broad as to exclude bringing a company like AIG under the umbrella of this regulation.
It excludes the business of insurance, not insurance companies broadly.
Mr. Chairman, I just wonder if there's any way that could be made a little more precise in the language of the bill as we move forward, because I worry that people are going to look at this and say, well, if they're not going to take care of the most egregious practitioner out there of all, then how are we going to have confidence that this bill is going to restore the financial order?
I think the gentleman is raising some very good points. Let me suggest that you and I get together, make sure that this language is clear, that we have the right understanding, either then affirm it in the report language, or if necessary, seek to offer an amendment to the bill when it goes to the floor.
I thank the chairman for his indulgence.
The motion now before us is to order H.R. 3126 as amended, with the recommendation that the bill pass, and this will be a vote by call of the roll.
Mr. Waxman.
Aye.
Mr. Waxman votes aye. Mr. Dingle. Mr. Markey. Mr. Boucher. Mr. Pallone. Mr. Pallone votes aye. Mr. Gordon. Mr. Rush. Mr. Rush, aye. Ms. Eshue. Ms. Eshue, aye. Mr. Stupak. Mr. Stupak, aye. Mr. Engel. Mr. Green. Mr. Green, aye. Ms. DeGette. Mrs. Capps. Mrs. Capps, aye. Mr. Doyle. Mr. Doyle, aye. Ms. Harmon. Ms. Harmon, aye. Ms. Schakowsky. Ms. Schakowsky, aye. Mr. Gonzalez. Mr. Gonzalez, aye. Mr. Inslee. Mr. Inslee, aye. Ms. Baldwin. Ms. Baldwin, aye. Mr. Ross. Mr. Ross, no. Mr. Weiner. Mr. Weiner, aye. Mr. Matheson. Mr. Matheson, no. Mr. Butterfield. Mr. Butterfield, aye. Mr. Melanson. Mr. Melanson, aye. Mr. Barrow. Mr. Barrow votes aye. Mr. Hill. Mr. Hill, aye. Ms. Matsui. Ms. Matsui, aye. Mrs. Christensen. Mrs. Christensen, aye. Ms. Castor. Ms. Castor, aye. Mr. Sarbanes. Mr. Sarbanes, aye. Mr. Murphy of Connecticut. Mr. Murphy, aye. Mr. Space. Mr. Space, no. Mr. McNerney. Mr. McNerney, aye. Ms. Sutton. Ms. Sutton, aye. Mr. Braley. Mr. Braley, aye. Mr. Welch. Mr. Welch, aye. Mr. Barton. Mr. Barton, no. Mr. Hall. Mr. Upton. Mr. Stearns. Mr. Stearns, no. Mr. Deal. Mr. Deal, no. Mr. Whitfield. Mr. Whitfield, no. Mr. Shimkus. Mr. Shimkus, no. Mr. Shattuck. Mr. Blunt. Mr. Blunt votes no. Mr. Boyer. Mr. Radonovich. Mr. Radonovich, no. Mr. Pitts. Mr. Pitts, no. Ms. Bono-Mack. Mr. Walden. Mr. Walden, no. Mr. Terry. Mr. Terry, no. Mr. Rogers. Mrs. Myrick. Mrs. Myrick, no. Mr. Sullivan. Mr. Murphy of Pennsylvania. Mr. Burgess. Mr. Burgess, no. Ms. Blackburn. Ms. Blackburn votes no. Mr. Gingrey. Mr. Scalise. Mr. Scalise votes no. Mr. Dingle. Mr. Dingle, aye. Mr. Boucher. Mr. Boucher votes aye. Ms. DeGette. Ms. DeGette, aye. Mr. Gordon. Mr. Gordon votes aye. Mr. Markey. Mr. Markey, aye. Mr. Hall. Mr. Hall votes no.
Yeah. I just need to ask.
Mr. Rogers. Not recorded, Mr. Chairman. Mr. Rogers, no. Mr. Engel. Mr. Engel votes aye.
Have all members responded to the call of the roll? If so, the clerk will tally the vote. Do you have the vote to announce the vote? Yes.
On that vote, Mr. Chairman, the yeas were 33, the nays were 19.
33 ayes, 19 noes. The motion's agreed to, and the vote to pass the bill as amended is adopted. That concludes our business today. We stand adjourned.
Mr. Chairman, before you
yes, Mr. Bart.
Before you adjourn, I would ask that the minority have the requisite number of days to file dissenting views on the committee report.
Without objection, that will be the order.